Something about this whole situation doesn't add up. The US government just reopened after the longest shutdown in history. Inflation is cooling off slightly, and yet, Bitcoin is crashing harder than it has in months. Right now, Bitcoin's sitting below $98,000, dipping as low as $97,000 earlier. Levels we haven't seen since June 2025. Just last month, we were celebrating new highs in October, and now we're down more than 22%. If November ended today, it would officially rank as one of the worst Novembers on record for Bitcoin. So the question is, why? Why is crypto collapsing when everything we've been waiting for? Regulation, ETFs, mainstream. We were told the bear market was over. We were told regulation was finally here. We were told this time would be different, but something about this doesn't add up. Because when you zoom out, when you ignore the noise, the tweets, the memes, the crash we're seeing right now doesn't look random. It looks coordinated, it looks planned. So before we point fingers or fall for headlines, let's slow down and really break this down. Let's start with what's not causing the crash. Because the truth is, most of what you've heard online isn't the real story. Before we get into the real reasons behind this crash, let's clear up the nonsense. Because every time crypto drops, the same theories flood social media. Whales are dumping. China's banning crypto again. Some random billionaire moved his coins to Binance. Let's be real, none of that explains what's happening right now. Crypto is not crashing because a whale decided to move coins. That happens every single week. Big transfers don't equal big dumps. It's not crashing because of Russia, China, or any mysterious foreign sell-off. There's zero data backing that up. And it's definitely not crashing because some economist or celebrity made another anti-crypto comment on X. But still, people love to find someone to blame. Just look at Paul Krugman, a Nobel Prize-winning economist who's been wrong. Before we get into the real reasons behind this crash, let's clear up the nonsense. Because every time crypto drops, the same theories flood social media. Whales are dumping. China's banning crypto again. Some random billionaire moved his coins to Binance. Let's be real, none of that explains what's happening right now. Crypto is not crashing because a whale decided to move coins. That happens every single week. Big transfers don't equal big dumps. It's not crashing because of Russia, China, or any mysterious foreign sell-off. There's zero data backing that up. And it's definitely not crashing because some economist or celebrity made another anti-crypto comment on X. So what's actually happening here? The first and biggest reason is simple. Inflation data came in hotter than expected. That single report flipped the market's mood overnight. Just a few weeks ago, Wall Street was confident that the Federal Reserve would start cutting rates in December. The odds of that happening were sitting around 70%. Now, they've dropped to barely 50%. That change might not sound like much, but in the world of high finance, it's massive. When the Fed doesn't cut rates, it means borrowing stays expensive, liquidity stays tight, and risk assets like crypto take the hit first. Then there's the AI bubble. Tech stocks that carried the entire market in 2024 and early 2025, Nvidia, Palantir, AMD, are suddenly showing cracks. Even SoftBank, one of the most aggressive tech investors in history, just sold its entire Nvidia position. That sent shockwaves through the market. Because when SoftBank bails, it's not because they're scared, it's because they see something coming. And that something might be leverage. Way too much of it. Over the last few months, the crypto market has been flooded with leveraged bets. People trading with borrowed money trying to squeeze extra gains out of the rally. Add to that the fact that two subprime hedge funds just collapsed. Yes, that's a throwback to 2007. And you get a perfect storm of fear, leverage, and instability. So no, this crash isn't random. It's not caused by whales or tweets. It's the result of an overextended market meeting real-world pressure. And the worst part? We asked for this. We wanted Wall Street and crypto. We wanted institutions to take it seriously. Now they have. And this is what it looks like when their risk tolerance runs out. Whenever crypto crashes, one emotion takes control. fear. And right now, it's everywhere. The charts are red, traders are panicking, and timelines are flooded with crypto is dead posts. But here's the truth that every experienced investor eventually learns: fear is part of the design. Right now, the crypto fear and greed index is sitting near record lows, deep in what they call extreme fear. When that happens, most people panic. They sell off their coins, delete their apps, and promise themselves they'll buy back later. But later never comes, because by the time the fear fades, prices have already moved up again. This isn't the first time we've seen this. It's the same movie, just with new actors. Back in 2022, we had FTX and Luna collapsing. In 2020, the COVID crash wiped out 50% of Bitcoin's value in days. In 2018, the entire market fell 80%. And yet, every single time, crypto came back, stronger than before. That's the thing about fear. It makes you forget the long game. People see red candles and assume it's the end. But the truth is, these are the moments when the foundations are built, when weak hands leave and strong hands quietly accumulate. When everyone else is running from the fire, the ones who stay calm are the ones who survive. As Michael Saylor once said, Bitcoin will surge to $180,000, crash to $140,000, and people will still freak out about it. When you zoom out, the noise fades. The headlines, the panic, the red candles, they're all temporary. Because underneath the surface, the fundamentals of crypto haven't changed at all. Bitcoin still has a hard-capped supply. Ethereum still secures billions of dollars in real value every single day. And the builders, they haven't stopped for a second. While traders scream, crypto is dead on social media, governments, banks, and corporations are quietly preparing for a blockchain future. Just look at what's happening around the world. The Czech National Bank recently tested a $1 million digital asset reserve, a clear signal that even traditional institutions are experimenting with tokenized reserves. This isn't some hype project or startup. It's a central bank testing crypto infrastructure. Meanwhile, Luxembourg made a move few people saw coming. It confirmed that its sovereign wealth fund has already invested 1% of its assets into Bitcoin. Not planning to, not considering it. They've already done it. Their statement was short but powerful. Luxembourg hodls. This is not an announcement to seek attention. It's already done. That's a government officially recognizing Bitcoin as part of its long-term national strategy. Let's talk about the long-term vision, the part most people forget when prices start dropping. Michael Saylor recently made a bold prediction. He believes Bitcoin will surpass gold by 2035. That might sound extreme, until you actually look at the numbers. By 2035, about 99% of all Bitcoin will have been mined. That means there will be almost no new supply entering the market. Just circulation, trading, and accumulation. The last 1% of Bitcoin will be mined over the next 100 years. So what happens when you have an asset with almost zero new supply and a growing list of institutions, nations, and funds that want in? Scarcity meets demand. That's the equation that drives every major financial revolution. And that's why Saylor calls it the digital gold rush. Because this isn't speculation anymore, it's history repeating itself, just in code instead of metal. Back in the 1800s, gold reshaped global finance. It backed currencies, built empires, and decided wars. Now, Bitcoin is doing the same thing, but digitally. It doesn't need vaults or borders. It moves at the speed of light, and anyone with a phone can hold it. At the same time, something even bigger is happening quietly in the background: the rise of stablecoins. Apps like Cash App are preparing to roll out stablecoin payments next year, opening the door for millions of users to send digital dollars instantly. With nearly 60 million active users, Cash App isn't just another platform. It's a signal. It means blockchain is finally entering everyday life. Even traditional giants like PayPal and Visa are integrating blockchain rails, and countries like South Korea are already using Avalanche blockchain to process government tax refunds. partnering with MasterCard and Fireblocks to make it real. These aren't small experiments anymore. They're blueprints for a future where crypto isn't a side industry. It's the foundation of global payments. So yes, Bitcoin's price is volatile. Yes, the market is fearful. But what's being built underneath it? That's permanent. When you compare this moment to the early 2000s dot-com era, it's almost identical. Back then, the internet had a crash too. The hype died, the money vanished. But the technology, as the infrastructure, kept improving quietly behind the scenes. And when the world came back to it years later, we got Amazon, Google, Facebook, YouTube. This time, we'll get Bitcoin, Ethereum, Solana, and the payment networks that will power the next generation of money. That's the digital future. And it's already here. When the market crashes, most people panic. But the smartest investors, or the ones who build generational wealth, they see something completely different. They see opportunity. Because the truth is, every dip, every crash, every red candle, it's a stress test for conviction. The market is asking one question: do you actually believe in what you're holding? And that's where mindset comes in. Grant Cardone once said something that perfectly sums it up. If you gave me $1 billion in Bitcoin or $1 billion in real estate, I'd take the Bitcoin no banks, no tenants, no government, no loans, no termites. Just pure value. That's not a meme. That's how billionaires think. They look at assets in terms of control, freedom, and scalability. Real estate ties you down. Bitcoin opens the world. People like Michael Saylor, Jack Dorsey, El Salvador's President Nayib Bukele, they're not betting on hype. They're betting on a simple truth. The financial system is shifting, and those who move early will define the next era. The old system runs on permission banks, middlemen, endless paperwork, waiting days to move your own money. The new system runs on code, instant transactions, no gatekeepers, no borders. That's why nations are quietly accumulating Bitcoin reserves. That's why central banks are studying blockchain-based settlements. And that's why the smartest investors are stacking crypto while everyone else is doom-scrolling Twitter. You see, during bull markets, everyone's a genius. But in bear markets, that's when real conviction is built. If you've been in crypto long enough, you've lived through it. The scams, the crashes, the feud, the disbelief. And yet somehow it always finds a way back. And every time it does, the people who stayed, they're the ones everyone calls lucky. But luck has nothing to do with it. It's patience, it's vision. It's understanding that innovation doesn't happen in a straight line. It happens through chaos. So yeah, prices are down. But if you zoom out and see where this is all heading, you realize something important. This isn't the end of crypto. It's the beginning of a new chapter. And the ones who stay calm through the noise will be the ones telling the story when the next bull run starts. So, where does that leave us? On the surface, it feels like the sky is falling. Bitcoin's down double digits, altcoins are bleeding out, the fear index is flashing red. Again, it feels like deja vu. But if you've been here long enough, you know how this movie ends. Because this, right here, is crypto's natural cycle. Every crash, every correction, every headline screaming, "it's over," it's all part of the rhythm that's been playing since the beginning. Think back. Bitcoin once went from 6 cents to 36, and then back down to 21. It went from 85 cents to $29, then to $3. From $213 to $70. From $1,100 to $239. Every single time people said, "that's it, it's dead." And every single time they were wrong. The truth is, nothing fundamental has changed. The technology is still here. The adoption is still growing. And the idea that people can control their own money is stronger than ever. What we're experiencing right now isn't death, it's rebirth. These are the chapters that separate the believers from the tourists, the builders from the bystanders, the ones who panic from the ones who prepare. Because every bear market clears out the noise, every crash resets the game, and every moment of fear creates a new opportunity for the next generation of investors to rise. If you're still here, still watching, still learning, still holding, you're already ahead of 90% of the world. So take a deep breath, ignore the panic. And remember, volatility doesn't destroy wealth, it transfers it. Stay focused, stay patient, and stay curious. Crypto isn't over, it's just getting started. And when the next wave comes, you'll be glad you didn't give up when everyone else did.